We're here at REIT Week 2009 with Steve Brown of American Century Investment Management. What's your take on the recent REIT equity offerings?
What we've seen recently over the last, say, 2 months or so is about $12 billion of equity being raised by REITs. And I think this has been a very transformative event for REITs this year. By raising equity as opposed to new debt or refinancing debt, they've shown that they can reduce their leverage. So I think it's been very important, and it's sent a real strong statement to the capital markets that REITs are here to stay and they're going to be part of the solution. What the REITs have done by raising equity is they'll be able to play a role in getting the wheels of commerce going again in commercial real estate. Their role will probably be as buyers, as the primary buyers of commercial real estate as we move into 2010 and 2011.
Going forward, how would you compare the REIT investment proposition versus private equity?
I think the REIT proposition has come through this difficult period and passed all the tests. They raised equity to fix their balance sheets. They continued to have clarity on the earnings of the properties they owned. The pricing was a daily pricing model, so we did have obviously a very steep decline in prices. It was very transparent on what was going on. And then they did correct the problem, or the perceived problem, very quickly with this series of equity raisings we've seen over the last couple of months. Additionally, they've been forward-looking and moving with their commercial banks to roll over their lines of credit. And they've been very proactive in working with life insurance companies about getting mortgage debt for their properties.
Do you see any potential for mergers and acquisitions?
I don't see that as the primary source of growth for REITs going forward. What I do see is that in the private market, the private borrowers who use either commercial bank debt or CMBS debt, having an issue when the debt matures, because while they are able to service the interest payments, the loan to value is going to be reduced at maturity. So if before they had say a $70 million mortgage, in the new credit environment, they can only borrow $50 million against that property. So the question is, where does that $20 million of equity come from? And I think in many instances, it's not available from the owner of that property. And at that point in time, the banks, whether it's the commercial banks or the servicers in the CMBS market, will have to make a determination. And if they feel it's advantageous to foreclose on the property and sell the property to get paid back on the loan, then that's what they'll do. And that's where the REITs can step in and play an important role in sort of the shift in ownership from private hands to the public hands of the REITs for those properties.
Thanks so much for joining us, Steve. For more information on REIT Week 2009, check out REIT.com.